All right, Jeff, we got to start here. Has the thesis changed at all with everything that's going on in the Middle East? I have a feeling that you researched and put this piece together before all this quite ramped up.
Yes, you're absolutely right, Frank. And it is tough from a micro perspective to look at every tweet that comes out. It seems like the market is kind of tilting hour by hour. But I think in the bigger picture, this march higher to retest these S&P 500 all-time highs is underway. Call it a melt-up, call it what you want. But if you remember, just a couple months ago, Frank, when the S&P was down at 4,800, we are 25% higher now at 6,000, the S&P 500. And with all the positivity out of earnings, with the way we see some consumer strength and the way the profitability is still coming to the U.S. economy, I think we are going to see the shorts continue to be on the run.
All right. With that in mind, what's your word of the day today, Jeff?
My word of the day is rebalance. And why am I saying rebalance? I think it's prudent, Frank. We talked about all the emotion that's been injected in the marketplace. Go back to April. I was one of the lonely bulls out there. You can count on one hand how many people actually bought the market. We have a lot of hindsight traders out there and a lot of analysts reconfiguring their S&P 500 targets after reconfiguring them on that 20% drop. But I want to rebalance into this because I think we see a test. A new all-time high will be established here, hopefully in early Q3. But if you rebalance into that, I don't know if it's sustainable. I think there is volatility in the marketplace. There's a new volatility regime in 2025. And that's where it makes a ton of sense to rebalance and book profits. When we see the market move in this fashion, this manner, you're going to expect more volatility, specifically when you talk about all the global headwinds.
All right, so as we're rebalancing, how are you repositioning or rethinking about defense stocks? We were just talking about them a short time ago. They're moving the market higher. Do you think that all the geopolitical conflicts and tensions, are those priced into those names? And you look at some of them, like a Northrop Grumman trading below the valuation of the market, an RTX trading just above the valuation of the market. I mean, how do you view these stocks and the potential for earnings growth with a lot of the things going on globally right now?
Well, I think these defense stocks, or look at XLI, that is the sector spider industrial ETF. And I think when you talk about some specific names that I own, look at Lockheed Martin. That's been somewhat of a laggard. But as you continue to see these global geopolitical tensions ramp up, names like that will pick up. So I do not want to trim our exposure to industrials or specifically to defensive names, because that has been the leading sector for the S&P 500, up nearly 10% year to date. But I think where it makes sense is, if you remember, Frank, going back to Q4, even Q1 of this year, I was pounding the table, concerned about Mag 7 being over-concentrated. And what have we seen? We've seen a massive repricing, a revaluation of Mag 7. So right here, right
Jeff,
now,
that leads us to your pick.
Makes sense.
We got to get your pick in. We're almost out of time.
Well, Frank, I got to let everyone know how to get into the pick. But Amazon's the pick, Frank. And why? Because the last 6 months, it's down about 7%. You saw a lot of people profit taking. But the way they're doing custom chips, the way they're approaching AWS, that's a 41% growth engine year over year. Just AWS by itself is $1.5 trillion valuation.
Jeff, we've got to leave it there.